Hello, dear friends. Today we are going to talk about Bitcoin, which has come very close to reaching $80,000. But before that, I would like to thank you for subscribing and for trusting my analysis. Over the past 2 months, our community's audience has grown tremendously and continues to grow. And if you trust my analysis and you like it, then click the bell, because YouTube quite often doesn't let crypto videos through or show them, since it considers, and rightly so, that these are risky financial instruments. Let's look at the chart. Here we see the daily candles for Bitcoin. Let me remind you that we had range trading and Bitcoin broke out of the range to the upside. Let me zoom in to make this clearer. Bitcoin broke out upwards, and I was expecting this. A rise towards the 300 period moving average and the upper boundary of the channel into the area of $103,000. But as soon as we returned back into the channel and moreover consolidated below the 50-day moving average, I said that a return to this range zone would very likely lead, first of all, to a test of its lower boundary and also to a breakdown below this range. At the moment, this is exactly the situation we are observing. It's hard to say whether this will continue, but I tend to think that it will. And the target level for the decline from this range is equal to its width. That is, we broke through this sideways range downward, and its width is measured from the bottom to the top. So, 10% from the 76,000 level. We set aside 10% from 76,000, and we arrive at that boundary. Of the lower side of the range which we broke through, when can we at least start to consider that this might be a trend reversal? Only when we consolidate on the daily candles above the level of $84,250 and also engulf the candle of the decline from January 30th. And for that we need to see a daily close above $84,650. Then we have a chance to make another move to the 50-day moving average to test it in the area of $89,000 to $90,000. And there will be another moment of truth. For now, everything points downward, with a priority for a decline into the area of $78,258, $76,781. Where did the first level come from? Here you go, there was a bounce point here, yes, some kind of minimum that we then tested many times. Bitcoin is currently aiming roughly for this area. Now let's remove all the markings and look at the monthly candles, especially since today is January 31st and the monthly candle is about to close. In a few hours the monthly candle will close, January. It is very telling. First of all, I told you that the November candle would very likely be followed up in the coming months. At the same time, look, in December we got a red candle, that is, it set a new closing low. And in January we set a new high above the December candle. Thus we knocked the sellers, the bears, out of the market. And then we went on to update December's low. And with a high probability even today or maybe at the beginning of February, we will see a new low below November's minimum. At the same time, I want to emphasize that our initial technical target was the base level of this red March candle, not the base actually, but its closing price. In fact, it closed at the level of $82,550. But in November, we tested this level, which means our next target is the following support level. That is the closing of the March 2024 candle, which is around $72,000. And potentially it could even be the 50-month moving average, because look, we've already dropped to it and could even go down to the 100-month moving average. That's $38,000, but it's too early to talk about that for now. Let's look at the weekly candles. On the weekly candles, we can see that for a very long time the price was trading above the 100-week moving average, but close to it. I still expected that Bitcoin would go up to around 100,000, test the 50-week moving average, and only then would the decline continue. But that's not what happened. First, we broke through the 100-week moving average last week. I mentioned that this was a very serious risk of further decline. And this week we see a red candle. Again, just a few hours before the weekly candle closes, just like the monthly one, they both close today at the same time. And the potential move towards the 200-week moving average, which is somewhere around $58,000 to $60,000. Or at the very least, another test of the candle close from March 31st, which is in the $78,000 area. If 78,000 doesn't hold, then according to the monthly candles, we move into the 72,000 area. And potentially down here to around $58,000, where the 200-week moving average is located. I recommend refraining from any kind of investment or purchase of cryptocurrency, especially Bitcoin, because the downside risks haven't gone anywhere. And if a reversal does happen, we'll talk about it then. But for now, there is absolutely nothing indicating that the market has reached its bottom and is ready to turn upward. Subscribe to the channel. Once again, thank you very much for your engagement. Click the bell so you don't miss anything. And hit the like button to help me promote my videos to new viewers. Goodbye.